Hey guys, welcome to today's review. Currently it's 11:45 a.m. I'm 1 hour behind New York, so it's 12:45 in New York. So this is the current price action in USD CAD. So let's do this. Okay, basically this is the 1 hour chart, and as you will see here, from Tuesday and Wednesday from last week, right? Price was in accumulation here. As you can see, they were accumulating before they span up here, then accumulation, and then again we had another expansion on the buy side. Now, as you can see here on Thursday, they retrace back to this whole accumulation that was on Tuesday, and after that they kept on accumulating more orders this day, which is last Friday, during Asia. Now, what's important here is that, as you can see, we are on an uptrend, right? So we don't want to buy, for instance, here we took these relative equal highs, so we don't want to buy up here. We wait until we have a clear, let's say, this accumulation and a swing low and a new swing high, and when we have that range from a clear swing low to a swing high, we wait a retracement, and then we buy again, right? Because the high time frame is bullish. The usual mistake that you will see from retail traders is that they see this here and they have they buy up here, right? And it's not bad, but sometimes they could simply take that liquidity from those equal highs and then drop to the sell side. You don't really will know that. So when you have a range form, you wait. So we have, give me a sec, we have this accumulation, right? Then we have this rally up, then as you can see, price was accumulated here, up down up down up down, and then they broke the last high. So I know that many breakout traders had their buy stops there, buy limits there, buy stops. So those buy orders were triggered and were in buy orders in the market. And see what happens then. They drop price and they took them out, right? Basically, this whole bullish day was rebalanced on this sell-off here. So as you can see, they return back to this accumulation, and then they do the same thing. They start accumulating orders, but now here's the interesting part. Okay, let me zoom in. Okay, we have this accumulation here, right? So with this sell-off, the current market sentiment is gonna change to short-term bearish. So retails will see this as a bear flag, right? So they are expecting like this, like a break here, and then they expect price to continue lower. But as you can see, that does not happen. But see this candle here, this one here, this one here. You see that it opens and then drops, takes out that liquidity here, and what we have down here, we will have sell stops, right? So they trigger those sell stops and then see what happens. They break again the structure on the upside and they return back to this accumulation. Now when they return back to that accumulation, you will notice that maybe by a pip or a pipette they took the liquidity from this wick here, right? And then we had a rebalance back down. You see that price began going down, going down, going down, and then we return back to the accumulation, to the initial accumulation before the rally. Now what happens before this drop and this one here, right, is that you will see that they create this swing low, then they create another one, and then they break this swing high. So right now people are, each time price drops and drops, they keep on buying, and check this huge candle here. They dropped the price, they took everybody that went buying late, they took them out, right? Now after that you will notice that they start like drifting lower, right? You will see here. So people, what they see like a bear channel or something like that. I don't know how they call it in retail trading, but what you will see is that they basically are returning back to this whole accumulation here, because they, each time they drop, they move up, they drop again, they move up, they drop again, and then they move up. But notice this here. Okay, notice this. Okay, let me okay. We have this swing low and another swing low, and they are relative swing lows, right? See what happens here. This blue line here, this vertical blue line, is basically 1 hour before New York opens. So it's like 7 a.m. New York. As you can see, before the opening, they drop the price again. So they create like 1, 2, and 3 swing lows. Then they drop again, because this candle, even though it's an up candle, when it opens, it goes first to the downside, right? And they take the buy side, sorry, the sell side, all the sell side below these swing lows, right? And they return back again to this accumulation. So it's very, very important. Let me see if we have level. I think we have a level. Yeah, right now you see we have around the 50-55 levels. So we are in a nice level when the price dropped there, right? Now let's say that you didn't took a buy there, right? You will notice that they were making lower highs, lower highs, lower highs, another lower highs here. But then if we drop down, let me drop down to 15 minutes. In 15 minutes you will notice here, okay, we had the same thing. We had, okay, right here, lower high, lower high, lower highs, lower high, another lower high. Now as I mentioned before, this blue line here, this light blue line here, is 1 hour before New York opens, right? So as you can see, they took out this liquidity here, this liquidity here, and as we mentioned, they returned back to the accumulation with this wick. But now what we have a swing low, and then we have this swing high. So this is our current dealing range, right? So if we already return back to a level which can be a good buying level, we have to consider what the retail is doing and where are their orders. Currently they were selling, right? They were selling, they had like a trend line here. So based on that, we will take advantage of that and buy. They are selling, we buy, right? We do the opposite. Now as you can see, the price drops, and then returns back to this like accumulation. So if we drop maybe to 5 minutes or 1 minute, we will find a nice level for a buy there. Let's say that you didn't buy there, you didn't took this buy. In lower time frame, you will have a break in short-term market structure here. So this drop here, or this would be, this other one here would be a good buying opportunity there, reaching these relative equal highs, these relative equal highs, and this here. Also you will see, let me go back, you will see that we had a nice levels. We had here the 80 level, and remember we came from the 50 level, right? So now we have the 80 level. So here maybe there is a good opportunity for buys, and also we are in New York open, so we expect some volatility. As you can see here, they went on the upside, right? Now what other levels we had? We had a good level for unloading our buy orders, or taking partials or closing the orders. We had the 134 big figure, 134.10, 134.15, and even the 134.20. So those big figs, 10, 20, 30 levels, you can use as targets. So you can have your TP maybe here near the big figure of 134 or 134.05, which is a 50 level, or 134.10, which is a big figure, right? So you can have like I don't know, target 1, target 2, and then target 3 maybe here. So there's many ways to approach the target levels. Now guys, as I mentioned before, we could have a, let me zoom in, around here, a good chance to buy, and also here, right? Now let me go back and let's drop to the 5-minute time frame, right? Let me, right here. Now let's zoom in so you can see. Okay, here. Okay, now notice how the price reached our level here, and then they broke the short-term structure here, right, with this candle, and they continue breaking swing highs. They broke again. So my new dealing range is not gonna be in this time frame. Talking about this time frame, it's not gonna be this low, but this low. Why? Because this rally up confirm the breaking structure here, right? Because right now I'm in the 5-minute time frame. If I drop down to the 1-minute time frame, you will see that this is a swing low. This one here, this one, this one is a swing low, right? And we have the previous swing low, which is this. So we will have a market shift. Then we have the first break here, and then when they break with this candle here, this other swing high, that will be the market structure break right there, not here, right? So let's clear this. Okay, now when we have the market structure break, remember this is a short-term market structure break. We will focus on these equal highs first and this high here. Now price drop, they took sell side here, they took sell stops. Remember, people are selling currently. They are selling. Each time they had like a retracement up, they sold here, they sold here, and they sold here. So probably sorry, there would be people that maybe were not able to sell here. So they will place in these relative equal lows, they will place a sell stop, right? So when price drop here, it activates their orders, and probably their stop loss was here or maybe here. Now when they drop the price here, they activate those orders and they pick more orders here in this block here, right? The down candle before the rally that breaks the structure. This one is very important. As you can see, let me clean this. As you can see, you have this here and this here. Let's say you buy here. When price reach here, you buy and your stop loss was here. And maybe your take profit was here, or your target one was there. Why? Because right there we have, let's say you buy at 65 and you take profit around 85, or yes, 85, let's say 20 pips, right? Now let's move to the other side. Okay. Now as I mentioned before, let's say that we were not able to buy here, right? Now we have another chance. Here we have a swing high, we have this other swing high up here. Let me clean this first, okay, and let me zoom in. Right here. Okay, so our target is it here. Now, assuming that we were not able to buy down here, we don't rush. We simply wait for the structure to show that they really want to go for the buy side. So we wait for price to break this swing high, and then here they break again another swing high. So we have a market structure break, and our current dealing range would be from this low here. Let me put another color. So from this low up to this swing high, right? So when price start retracing, we buy. Maybe we can look for the 80 level, and we buy there at the 80 level, and our stop can be here maybe, right? But as you can see, they drop price, and we had this inefficiency here from this high to this low. There was only buy side. There was only we had only buy side. So we need price to return and at least fill all that inefficiency, or at least the 50%. So on this down candle we could start buying. We buy and we protect maybe down here or here or here. It's up to us. We also can drop even lower to 1 minute time frame, which many people say it's noise, but it's not really noise. Okay, now I want you to notice this here. What I see like a small accumulation. You will see what I mean. Okay, you see price was here, so they kept price like in accumulation right here. Maybe it's not clear for many, but for me this is accumulation, right? See, now this drop here was the initial buy. Let's say we were not able and we didn't buy here. We wait the break of the structure. Let me clean this. Okay, we wait when they break here and they broke here. So in this return back again to the accumulation, we can start buying. Okay, maybe when they drop here, we buy here, and our stop loss can be down here. Now if we are breaking structure to the upside, we don't really want to see price dropping that lower. Why? Because they already dropped on the previous range. You will see here that this was the, let me, okay, this is the previous range, right? As we talk, this one here. See this one here. This was the previous range. As you can see, they rebalance that range, they return back here, this accumulation, and then they break the structure again. So on the next retracement, let me move a bit, right here, okay, here. On the next retracement, we don't want to see the price drop that low, right? We don't want to see that. We want the price to maybe return to 50% of the last rally, or to this, back to this accumulation. And remember, on that accumulation we had the 80 level. It's around here, and as you can see, check this out, it's only weeks. The actual volume is the body of the candles. See how they accumulate here? Up, down, and then they broke finally from the 80 to the 134 big figure. So you have to follow price, right? When we are in these kind of environments in accumulations. Now let's go back. As you can see, price reached the 134 to almost 20 or 15 was nice, because this line here is the equal high. So check what they did. They dropped there, maybe they trigger some orders, some buy orders, and then they retrace back again. So also it's late in the day, it's late New York, so maybe by 18, by this time you already want to already close, have your orders closed, or have take profit or stop loss, it doesn't matter, but it's important to take your orders during the first hours of the session. Let's say from 7 a.m. New York to maybe 9 or 10. Why? Because the initial move given by New York is this rally here, this rally, and then this continuation. Then here you see a small retracement back to this small accumulation that is like a London close entry, right? It's like almost 15 pips or so, yeah, 15 pips. But anyways, let me go to 15 minutes. As you can see, and as we mentioned previously, they took all the stop loss from the people that were selling. They took all those stop losses. So see how they go. They reach those levels, they took this liquidity, this, and this, and all that liquidity is highly important, because these were previous sessions and previous days highs, and this one up here. And see the reaction immediately. They drop price, maybe, let's see how much they drop. 20 pips. You see, they go from the 50 to the 20 or so, so it's like 70 pips on the upside, and then they finish the day dropping a little bit. Now I think I'm gonna leave this one right here. It's almost, I don't know how much time I have left. Oh, it's almost 15 more minutes. So okay, I hope you enjoyed this one. I know it was very long, but I hope it helps a lot. Any question, just let me know. Bye bye.